Okay, now we are going to discuss about the auditing. Auditing is the word derived from the Latin word audire, and meaning is to hear. In early days, like auditor used to listen to the accounts read over by the accountant in order to check them. So auditing is a old accounting. It was in use in ancient countries such as Mesopotamia, Greece, Egypt, UK, India. The Vedas contain the reference to account and auditing, and Arthashastra Kautilya also detailed rules for accounting and auditing. So originally objective of auditing was to detect and prevent errors and the frauds. So auditing evolved and grew rapidly after the industrial revolution. It has come a long way from hearing of accounts to taking the help of computer to examine the computerized accounts. Auditing is one of the four pillars of democracy. It is vital instrument ensuring effective supremacy of the parliament, and it is also valuable ally to administration. So it deals with papers and figures, and it is the post facto examination of accounting of financial transaction of the firms or a company or a department of government. So auditing is an examination of accounting and with a view to establish whether they correctly and completely reflects to which they relate. So it is the checking of the correctness of the accounts, legality and accountability. So audit is the watchdog of the financial interest. It is the instrument. It highlights helps to highlight the losses, waste and underutilization and capacity to improper decisions and appropriate level. Okay. So auditing is an introduction to the Indian government accounts and audit. It issued the Comptroller and Auditor General of India, defines the audit as an instrument of financial control, act as a safeguard on behalf of proprietor and against the extravagance and carelessness, fraud, proprietor, agent, or servant in the realization and utilization of the money or other asset, and it ensure propriety like accounts maintenance truly represent the facts and the expenditure. Okay, so a basic feature of auditing is audit is a systematic and scientific examination of the books and accounts. Audit is undertaken by the independence of the person. An audit is a verification of what is the profit and loss of the account. An audit is done voucher document information explanation of the receipts. An audit has to be satisfied with the authenticity of the financial statement. An auditor has to inspect the check the review scrutiny and the voucher supporting the transaction examining the book and shareholders. So it's a memorandum of association and article of association in order to establish the correctness of the books of the account. So to check the legality, to check whether the it is the same authority was maintained the budget, or the check whether it's maintained or not, to check whether rules and procedures have been followed or not, and economy is maintained or not. So the traditional audit focused collection of revenue, maintenance of law and order, and defense of execution of public work. So whether decision or its implementation is according to the law, rules and regulations governing that activity. So gradually its dimension was extended in financial audit and now its value for money audit. So financial audit is basically means the audit of financial statement and whether they provided reasonable assurance that they present fairly the financial position, results of operations and cash flow in the audited. So with the generally accepted accounting principle of financial audit state auditor to almost the same kind of job. Okay, chartered accountant do auditing. Some financial auditing came the stage of value of money characterized by 3E audit and known the performance audit. It is the independent assessment of performance of the organization program and project. How far the result have been achieved, the money, man and material. Put it differently, examination is made regarding the economy, efficiency and effectiveness. An economic audit is aimed at ensuring the activities are undertaken and completed at a lowest possible cost. An efficiency audit is concerned with the assertiveness that activity is completed according to the predetermined output to input ratio to a predetermined timetable. So, effectiveness audit is necessary to determine whether the objective for which program were undertaken have been achieved or not, and whether the program have intended